Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. Hey, Dustin, good to see you, my friend. Hey, Tanner, great to see you guys. Hope you had a great day both in and out of the market. It is the 18th of April. It is the end of our trading week. Really weird to not think about Friday being a trading day. That is just really weird. We get Monday holidays, going out throughout the year, but, not many Fridays. So weird feeling, I guess. So maybe the market thought so too. Was a little bit of just kind of a doji day for the most part. You did see a little bit of a bounce back in some of the healthcare, most notably the healthcare plans. Nothing dramatic. They were so beat up. Can't blame anybody for covering some shorts going into the long weekend. You saw a little bit of a rebound, certainly not enough to make me think of anything other than go ahead and retrace a little bit if you want to. Hi, Patricia. Great to see you. Big day. Well, big day, maybe a little strong, but a good solid day for the industrial sector after taking out that resistance level. We're moving over there. We've got some earnings coming up next week in that sector, so we'll have to keep an eye on them. And hey, Lloyd, good to see you, my friend, and good morning to you. It's morning for Lloyd, so good morning, my friend. But not a whole lot of activity outside of some of our big earnings movers. Still seeing some good movement in the railroads, across the board in industrials. Tech just continues to do what it does best, which is just apparently go up. So on the earnings front, we're going to be a lot heavier next week on earnings. Some of the big names: Facebook, Visa, Intel, Procter & Gamble, Verizon, Chevron, Boeing, Coke, 3M. Lots of big names. Over 100 S&P 500 companies will be reporting at some point next week. So if that doesn't get you thinking, yeah, it's earnings season, try to go through your weekend routine, scanning through the markets, looking for trade setups and disqualifying. I don't know. I probably lost about half of the trade setups that I had for next week because they had earnings either next week or the following week. So it's earnings season when you're finding good trade setups and saying, ugh, it really has to have earnings on Friday. But such is life, right? Such is life. If you are not willing to hold swing trades through earnings, I guess you have no right to complain. So, of course, make sure you're staying on top of that earnings calendar. I don't need to warn you guys about that, but I will anyway, just in case. Over on S&P 500, a little bit of a pop on the open, followed immediately by a drop. I mean, we basically not happening today, but we really fought back throughout most of the rest of the trading day. Maybe, psychologically, again, closing above 2,900. I think that's at least a little bit of a psychological win for the S&P 500. If you look at it on a daily chart, it is a doji at the 9 EMA. So not a whole lot to see here. If you look at it on the weekly chart, it is a doji right below resistance. That is kind of the market from a broad perspective right now. Not a lot of movement, but you have to. I think we're still in line to challenge these highs. There's been lots of opportunities for folks to take profits, and they've just not been willing to do it. We saw that all week. That's how we ended up with this weekly doji here, right? So, we still got a little ways to go before we get there. We're not that far off, of course, on the S&P 500. We're a stone's throw away at this point in time. It seems like it wanted another day closing above the 9 EMA, although we did touch it finally today for the first time in quite some time. Just seemed like, yeah, let's just let this one end. Let's go enjoy our 3-day weekend. We'll get back to work on Monday, right? So over at NASDAQ, another just decent little, not a whole lot. Again, that was just not the market, broadly speaking, we were in today, and really not the one we've been in lately. But a nice solid close yet again, coming off of the intraday lows. You see the way this candle develops. I mean, we were looking like, hey, maybe it is a pullback early, but nope, not at least a textbook pullback. Just still, knocking on the door of that all-time high, just a hair below that on the NASDAQ. little bit of a bounce, on you had Travelers come out with earnings. That was helpful, but a really solid little day over in the Dow, just a little more continuation. Definitely the biggest winner today. And hey, Scott, good to see you, my friend. Hey there, Zach. Always a pleasure, guys. Hope you're doing well. So, I mean, again, I wish there was anything more interesting to say broadly, but I mean, it's just a little bit more of the same. Interesting, maybe we're going to get some interesting things over on the rut. We sold all the way into that support zone that we were looking at yesterday. There's a lot to prop us up there, the 20, the 50, that old swing low. And I guess buyers thought so too. It sold into that support fairly early and then really rallied off of that nicely, which is interesting. I still really like a potential break above this little short-term resistance for just a very short-term move into that 1600 range. That, of course, is, as you guys know, the big one for me. A good start. I'm not really interested in trying to trade into the rut right now from a directional point of view. Still has to break 16 for me to get there. And even then, I'll probably like other things better. But nice movement today, coming off of that support zone. Again, I think what it really shows more than anything is buyers, they're not going away. They just don't want to go away right now. Whether you think they should or shouldn't, it really doesn't matter. They are always there looking for a deal, it seems like. Over in materials, not much to say here. Doji right below resistance. We all know where we're at with this guy here. We do have some earnings coming out in this space over the next couple of weeks, fighting with resistance, closing right below it here today. Probably the way I would have liked it to be. Don't break out today. I don't want to have to decide if I want to do anything over a 3-day weekend. Now I have all weekend to enjoy myself, and then, hey, maybe we can break out on Monday. That would be okay with me. Hanging out right on top of that 9 EMA. Things are looking pretty decent over there for the most part in the sector. In my mind, you did see things like Newmont kind of take a little bit of a hit today. But overall, I still like it. I know we've been talking a little bit about Lynn within this space this week. In the market, and it's just kind of sitting there. It's had that pullback. Now we've gone into a consolidation, and if you kind of think about putting these together, the market's been a little bit flat, right? The sector has been basically hanging out at resistance all week long now, and we've been consolidating all week long as well. Now, I'm certainly not trying to tell you what to do. You guys know me. I would never want to do that. But if we can see that break in the sector as a whole, and we see that confirmation, that's what we saw on 3M last week, right? Where we had the sector, the industrial sector, lining up off of support when we saw that hammer. If we can get these things working together, it doesn't have to be Lynn, just an easy example that we've already talked about, but that's really how we can use this sector analysis on our short, in a lot of, we can use a lot of ways, of course, but that really is my favorite thing. When you have a good signal, say a breakout, and then a little bit of a break on a pullback, that might be something I'm interested. I put it on the list for the scouting report meeting this week, so we'll see if it makes the cut. It'll make my cut. So over in energy, just rocky. Again, we've talked a lot about it. I still like it. I still maintain that it's more likely to go up than go down, but it is definitely going back and forth. And if Coach Mark were with us here today, he would say it's because it's battling the 200 weekly moving average. The last 2 weeks, that is what has been causing at least been the top of our trading range, still above everything on the short term, and even above our weekly short-term moving averages as well. Maybe that can explain a little bit. We've got a 200 daily and a weekly just right above us. That's not a place where folks maybe want to buy. Whether that's the case or not, we are definitely back and forth. I wish it was showing a little bit better strength. I still think the trend is there, and I still, overall like it as long as it's holding that 50-day moving average. But I would like it a lot more if it would start behaving. Seems like it's starting to pen up, and while that might decrease the odds of it actually going up, I think it increases the odds of popping if it does. So I'm going to maintain the course for the time being on energy. I'm not loving the day-to-day activity. We do have some energy companies coming out with earnings. Maybe that can give it the pop or put it out of its misery and get it back into the neutral range. I don't know, but we do have, we have Chevron coming out. I think Exxon's coming out next week. So maybe some earnings can give it a little bit of a shot. If we can clear those 200 averages and that old 69-ish level of resistance from last spring, I still think the upside warrants it. Even though I'm having less faith in the upside materializing, the longer it does this, at the same time, if it does, I expect it to be able to pop nicely. So I'm going to just continue to be patient personally. Over in financials, after quite a bit of earnings, for the most part, I think you have to say the market liked the earnings in the financial sector. We still have, of course, financial earnings, but a lot of the big names have reported now at this point. So exactly, Zach. I mean, it doesn't have to be as pretty as you'd like it to be, right? You can ask, but it doesn't have to be, and it's holding support and trend. So what do? You just stay the course, is I think always the right answer. Financials ended right knocking on that resistance level here today. Seems like they want to break out. Weren't able to do it this week, but it does, to me at least, seem like the market was pretty satisfied with the earnings and some of the big names within this space. So I am still looking for a potential break going into the second half of the month in the financials. Really wouldn't mind a little bit more of a consolidation period if I'm getting what I want. Maybe have this breakout on maybe Thursday of next week, if that is okay. If that's not maybe a little too much to ask. From a support point of view, I think you can probably at least start to entertain the notion of kind of using this trend line, which is just going to put us right about there with our 9 EMA, maybe just a hair below it, as kind of that primary level of support from a pullback point of view. But I have to like the response to the earnings this week. I mean, I don't think they were great. Earnings tended to beat, and revenue tended to miss. Was kind of the theme I noticed within the financial sector's earnings this week. And I guess okay earnings are better than bad earnings, right? Then we have our friends over in industrial. Very strong movement here today. Those railroad stocks are doing well. Yeah, John Deere have a nice little pop. Cat tried to run early. I thought maybe I'd be bringing out the Caterpillar hat today, but nope. I need a John Deere hat instead. Apparently breaking out of some resistance. Very nice move here on John Deere today. Just continues to be an area I really like. It is probably for next week my favorite area, just with kind of where everything is lined up. I don't really big picture like it more than discretionary or tech, but maybe going into next week, I might like it a little bit better early in the week. I still expect it to work its way up into that 80 range. Maybe not all in one fell swoop. Yeah, I think so, Zach. A little more strength. I mean, the earnings really, they had to give you at least a little pause. If you were thinking bearish, short term at least, I think the earnings and financials have to give you a little bit of pause. Traders overall tended to like them. And I much prefer industrials. So I expect it to continue to work to $80. And until I see something different, that will be my plan with the industrial sector. I continue to really like it. Again, we do have some earnings coming out in this space next week. So we'll have to see how that impacts it. But as it is right now, 77 kind of should now act as our first level of support. We all know how much history we have in that 77 range. Now our short-term moving averages are catching up into that area as well. So I'm going to continue to like industrials until they give me a reason not to, I guess. Same with tech. Well, maybe new trade setups are more appealing to me, but the problem is a lot of the ones in the industrials have earnings next week. So I didn't have a very big list. I might be looking to XLI for an instrument next week because of that. Tech, another great looking day. Yeah, that was a strong breakout. And I mean, tech, goodness gracious, after breaking out of that resistance, this is why you can't be afraid. This is, I'm not afraid of a breakout, as you guys know. Our brains sometimes say it can't go any higher or lower, but the momentum says shut up, brain. What do you know, right? And the chart's always been smarter than my brain, at least. Just continuing to march to the upside. Not super heavy. I think Microsoft is next week. More of the big name tech companies will be the week after. I'm sure there will be some, of course, next week. But we still have lots of earnings in tech. But another day somehow getting even further away from that short-term 9 exponential moving average. So just a ton of strengths. At this point, again, much like XLI, I think we can kind of look at this old resistance zone at 76 to be our first level of support. I can only speak for myself, but if this were to pull back into 76, I would be very interested from a bullish perspective. Now, I don't have really any expectations of that happening, but I would be very interested if it did want to come back and test this old resistance as new support. I mean, it's just, yeah, it has been impressive to say the least. Little bit of back and forth that probably has to be expected over in the staples. Still really like it, but we are now dealing with that resistance zone between 56.50 and 57. We're not, we ran into the 57 marker here today, so we might as well just call it 57 now, right? That's a little bit of a battle. That was a pretty big turnaround point, and so no surprise, maybe a little bit of slowing down. Do we need a pullback? Do we need a consolidation? Probably, at least ideally speaking, for new entries, probably, but showing a ton of strength, fighting at resistance. We talked about it yesterday. If we can clear that resistance level, I mean, we really don't have much for a ways to go, into the 58 to 58.50 range. And so still a lot of strength. To me, still many of these stock charts within the individual components are looking very strong overall. Continue to like it. Continue to kind of hope for a little consolidation or a pullback for maybe some next week opportunities. But, again, that's why you have to be ready for pullbacks or breaks, right? The market, I ask all the time, and sometimes it listens and sometimes it does not. Over in utilities, on the other hand, I mean, I don't know how you want anything to do with this sector right now, one way or the other. Very sideways, very choppy. Had a little bit of a bounce early in the day off of that, 50 that we're kind of hanging around right now, only to run right into that falling short-term 9 exponential moving average. This is, if I didn't like it 2 weeks ago in here, I didn't like it last week here, I definitely don't like it this week here. It's still overall, I do think it's more consolidation than turning over, as long as we're holding that 57. But we did close below the 9 weekly moving average for the first time since we broke back above it. I don't know what that means. I'm not going to lose any sleep over it. 57 is the line for me, and as long as that holds, I do maintain it's a hard sell to want to go bearish. Break below that, well, you have my attention, at least short term. So 57 still the number, still want nothing to do with this sector. Can't imagine next week it's one of my favorites. I guess, a break below 57 could be intriguing, but probably not all that interested in that either, to be honest. But still very, very sideways over in the utility sector. It was ugly early in the healthcare sector. We did get a little bit of a bounce back to close off of those lows. So I'm just, XLU is for somebody else, I guess, right now for me. Whoops, I was supposed to go to an intraday chart here on healthcare. I mean, it started just like it had the last couple of days. Market opened up and just sell. Now, we did fight back throughout the course of the day. Now, my suspicions and beliefs are that was a lot more short sellers covering than new bulls jumping in to buy. I don't know that I'm right, but that is what my expectations are. Very beat up, a really, really rough week. And so no surprise, there's a little bit of profit taking within this sector. It still looks ugly, and most things do. Merck actually, I couldn't, I almost did a double take when I realized that Merck had sold all the way into its 200-day moving average yesterday. I mean, this was a stock that wasn't that long ago was very, very bullish, and just one of many stocks that have taken a horrific beating these last couple of weeks in healthcare. Continues to be a stay away from a bullish point of view. From a bearish point of view, as long as the setup's there, I'm interested. With so many of these things being fairly extended to the downside, a little consolidation and then another breakdown or a little bit of a bearish retracement into that 9 EMA, which will catch up to us relatively quickly in the days to come, would be an interesting development too. So I'm looking at this still from a bearish point of view, although I do, again, it makes sense to me. It's the end of the week. Most of us, anything bearish that we did in healthcare, we probably hit second, if not it came close to second targets this week. It moved faster than I expected. I'm sure it moved faster than most of you expected. Not that I'm complaining about that by any means. So a lot of reasons in my mind to take profits here today. A little bit of a doji. Still be looking forward to new bearish opportunities in healthcare next week for sure. Over in discretionary, just a Nyan day. We talk a lot about tech and justifiably so, but this discretionary sector doesn't look too much different than it. To be honest, we had a little more chop on our way to break that 112. Right, that was a little bit of a choppy time period, but I mean, since that break, I mean, it's basically just chop, 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 up, and it's always somebody else. It's everybody's chipping in. If somebody's not pulling their weight today, somebody else within the sector seems to step up to the plate. Again, I think right now we can use 118, that old resistance, as our primary support level from a pullback perspective. No real great reason to think that has to happen on Monday morning. Continues to be an area that I don't know how you don't really like it. I mean, it's very much like the NASDAQ or like tech, just above everything, been forever. I understand if you want some pullbacks, but they're out there, right? You still have, some of the more of the brick and mortars in those, they're early stage, and which makes them a little riskier, maybe percentage wise. But I think we looked at urban yesterday. It's not going to be for everybody, and I certainly understand that. But we've shown signs of turnaround, right? I think we looked at Kohl's a few days ago. So there's still things out there on the pullback side of things too. Whether we may not be our cup of tea, and I certainly understand that. But there's, again, I still really like this area. And I have a hard time seeing why you wouldn't, I guess right now. If you like tech, I can't imagine, at least short term, why you don't like discretionary. Maybe long term you like tech better, and that's a little different conversation, right? Over in real estate, finally caught our footing here today, closing back above that 50. It did test that intraday low from yesterday early, and was able to rally off of that. Now, for me, that's too little too late. I needed to see some conviction yesterday after that sell-off there on Tuesday. I would understand somebody liking this if we can continue into some upward momentum on Monday, a little bit of a hammer candlestick closing back above the 50. I could understand that argument, but I am not going to be the one to make it. It does not really have my interest right now. So good luck to anybody who trades into the REITs bullish early next week if you get your signals, but I'm going to sit this one out. That pullback was a little too violent, really no interest yesterday, just too little too late for me. Big picture though, I certainly could be wrong. I've been known to be cowardly. I think our real support level still, we really have some room to go to the downside, as weird as it sounds, from a longer term perspective to test that breakout point, right? And so still think you have to be overall bullish within this sector, especially above this, 3470 or thereabouts. But I just think that that was just too much for me. I'm too wimpy. That is just too much for me to want to get behind. But hey, might be wrong. And certainly if you wanted a pullback in real estate, you got it, right? We didn't have one for a long, long time. So if you wanted it, it's developing for you. So I guess that's a good thing. And lastly, over in communication services, again, just another day around that old support level, as it just continues to back and forth. As you guys know the drill. I'm still shying away from those video game companies because I don't like them for the most part, especially right now. But I might be wrong. You've got, your AT&T, I think Verizon, both coming out with earnings, Facebook coming out with earnings. So there are going to be some earnings next week that can impact the way that this looks. Those of you who were around last earnings season, you'll remember this was the Facebook earnings day. And that's how much of an impact it had on this ETF. So we definitely will have to see how earnings impact this one as we work through next week, especially Facebook's, and then Google's will be the week after. So, back to back big names within this space. So, other than industrials really, carrying through on that little break that it's been working with, and we closed that yesterday, of course, and a little bit of a bounce back in healthcare and real estate. Fairly uneventful day from a big picture point of view, I think. Just and probably the way, I at least think you wanted it. I think we didn't want something crazy to happen today. Doji going into the holiday, I couldn't have asked for much more personally. So over in the VIX, not a whole lot to see here. Pretty mellow day, in the market, pretty mellow day in the VIX. Now we did see a nice pop on the dollar here today. Weakness over in Europe. Nice little pop, while we were sleeping in part on the dollar here today. We still have to deal with resistance that's sitting right above us, right? And we talk a lot, and now we're getting there of why this might be interesting, why I like a break above that 97, not for necessarily a swing trade, the moment it happens, but there's really not a lot of resistance until, over $100. And while that, I know that doesn't sound like a lot if you, aren't familiar with the currency market, but that can create some big moves. And hey, Nicholas, good to see you, my friend. Oh yeah, I'm looking forward to it. Honestly speaking, though, I'm looking more forward to next week, which is the NFL draft. That is my favorite holiday of the year. I nerd out big time over the NFL draft. So yeah, I will be Friday. I won't maybe be quite as attentive next Friday, although it's not so bad anymore. You used to, have it on, during the daytime, but now it doesn't kick off until the afternoon. So I'll wrap up the market recap on Friday next week and Thursday next week, and then I will be running to the telly. But over on the dollar, still need to break this. That's a lot of strength, and it does lead me to believe that there, is some legitimate hype behind this potential breakout. If you absolutely made me say what it was going to do, I'd want to say it was going to break out, even though I know the technicals say it doesn't. Now, that doesn't mean I'm going to do anything by any stretch of the imagination, but it really seems like it wants to try to break through this resistance to me. But you guys know me. You have to prove it to me. It doesn't matter if I think you will or not. You have to prove that break before you have broke. But a good day in the dollar. No doubt, a little bit more room, but that is some pretty major overhead that we are about to challenge. Could definitely see a breakout, maybe as early as next week if it wants to push that. Timing wise, it could potentially happen that quickly. Over in gold, just hanging out here today. Not really, much like silver when we kind of broke down, we just we've held our own, right? I still think that this is bearish. I wouldn't want to buy gold here by any stretch of the imagination, but a little bit of a bounce back. Now, if that dollar breaks, we're probably going to see gold struggle. That's just usually the way it's going to work. If the dollar can break that resistance, probably going to put some pressure on gold, which is technically already under pressure anyway. So I still continue to look for this to move to the downside as long as we're basically below this 9 EMA is kind of how I'm going to be gauging it personally. Just watching this 9 exponential moving average, 1280, kind of that first level of resistance or that zone at least. But the 9 EMA that's going to continue to push us down will kind of be, if this wants to rally a little bit above 1280, I'm not going to get too concerned as long as that 9 EMA is above it and pushing to the downside. Still a pretty bearish signal in my mind. Just didn't get a ton of movement, and that's not necessarily a bad thing. So yeah, I expect, honestly speaking, I expect it to be at 1260, 1255 in the not too terribly distant future. Just hasn't cleanly, just because I've been calling it 1280, doesn't mean that that's exactly what it is, right? It hasn't sold everybody that that's a break, I guess, just yet. But I do expect to be talking in the not terribly distant future, and we're around 1260, saying, okay, there's some support there. maybe a profit taking zone, or if I'm a potential longer term buyer. But yeah, probably not that, at least not the first time. But we did hold our own here today. Over on silver, we did too. Now we're almost developing a little bit of a pinch going on here. Now we talked a little bit about these intraday lows yesterday, and it kind of played out here again today. I'm using the 4-hour chart here, as it's putting up a little bit better of a fight, holding that breakdown point. I'm still not 100% sold. Again, if you make me do anything, I would say, yeah, go bearish as long as it's, closing below 15 and use this trend line as resistance. Don't think we've had that confirmation just yet, though. And I do have to say I'm a little surprised in some ways of how much of a fight it has put up since breaking that pretty obvious, in my opinion, at least $15 level of support. So, I still look for that to ultimately be the way that it breaks. And I do think in this particular case, we can use this trend line as our primary resistance level. We now have 3 different occasions at that, at those peaks. So I'm comfortable calling that primary resistance right now, putting us at about 15, 12, 15, 15 or thereabouts. If we ever do take out this little developing upward trend, I think that would be a sell signal. Yeah, I mean, that's kind of the last line of support, with that. So, conservatively, if we take out the low point, I think that is going to be a potential entry for some bears in silver. More aggressive bears probably are looking for some sort of break of that short-term, upward moving portion of that intraday trend, but not today. Not today. Interesting, and this is going to be a fun one to talk about here on Monday. Let's see how this open goes on natural gas. But I mean, we talked about it yesterday. It didn't matter. We can get rid of that line because, well, it didn't even count. It fell right through it. Now, this is a major support zone, and probably a more aggressive trader would say it's broke it. A 250 is the easy number to call it, and we did break that here today. It's more of a zone to me. I'm not ready to call it a break. I expect this area to fight. I want to see what this open next week's going to look like. If this puts us below this on the open, that's a pretty bearish signal in my mind. If we can, and hey, maybe it gaps to the upside, right? Natural gas can do some things. I don't expect it to make a huge move, but doesn't mean it won't. It's just been a little more normal gap. I mean, it always tends to gap on the open, just nothing like we were seeing late last fall or early winter. So this is a very interesting price point for it. I don't think you can say it broke it. Well, when I say you, I mean me. I don't call it a break just yet. Can understand a more aggressive trader than I would call it that. Looking at this weekly chart, I mean, it's natural gas, but there is just not much support. It seems like if this break pushes down, $2 is not that hard of a thing to see us at in the not terribly distant future. So we'll talk about this one, of course, every day, but really look forward to talk about this one on Monday. If we can get back above this range, I'm just going to say, hey, no, it hasn't broke yet. And maybe that support level could hold. And if this holds, I know I'm projecting out a little bit, but if this support does hold and we take out this top that we were looking at during this consolidation period, that would be a really nice W. And that would be a really good signal from a technical point of view, just like a clean break will be a good technical signal. So I think we're actually, if we're interested in swing trades in natural gas, we may finally be there. But we'll see you on Monday, natural gas. I'm not going to think about you again until Sunday afternoon. But you're off limits today. Let's see where you go. I want to get a little bit more confirmation, just a hair below, not enough to sell me. And lastly, over on crude, basically another day right within this range, really shaping up nicely in my mind for a little bit of a short-term bullish play on the breakout, just below $65. So yeah, I wouldn't be. I understand if someone's buying natural gas right now. I mean, they are way braver than me. But I mean, that has been an area that historically is held. And so from a risk to reward perspective, I get it. I would never be that guy, but I certainly understand. So yeah, I'm with you, Zach. it needs to break for the signal. And if buyers want to come in there and buy off of it, then I'll cheer for them. I still really like that potential W that's now weeks away at best case scenario, if it is ever going to happen. So I'm all right if it wants to play that way. I'm nothing if not patient when it comes to anything, but natural gas in particular, at least these days. Back to crude, just right within this range. Still, everything's kind of the same here. The break just going to put us right around 65, just north of this resistance. We'll peek at it one more time on this daily chart. That is a very sideways trend. If this was a daily chart, we would look at this. Well, I would look at this and I'd say, oh my goodness, if it ever breaks that top, that is going to have a nice little pop. And technically it's no different, right? So I do expect a break of that resistance to be not hard at all for us to get into that $67 range. That's what I'm looking for. Support down at 63, but of course we've got all of these short-term averages, this is 20, and then of course the 200 a little bit below it to act as some support if it wants a deeper pullback as well. It doesn't seem like it wants to. I think the break's the easiest play here if we get it. If we do break below that little intraday support, probably should see some very short-term selling. Certainly not enough to be bearish on anything other than intraday time frame in my mind. But really don't think that there's really nothing until that 20 SMA, which isn't much. That's why more of an intraday play if that 63 zone does give out. But I still think for these guys, you're just waiting. We break, that's a signal. Whether we want to take it or not, that is really the debate that we are having. So, ladies and gentlemen, that is where we find ourselves. Fairly uneventful day in the market, especially after the last couple of days that have seemed, even though the market's not done a lot, there's been a lot of interesting things going on with, with gold and the REITs and obviously healthcare, industrials. So a pretty, slow end to the week, but kind of the end that I wanted, to be quite honest with you. So I am not complaining whatsoever. Like I said, we're getting right into earnings season. And traditionally speaking, it usually means a directional trader is going to have fewer trades. There's just, if you're not willing to hold through earnings, and personally, I don't think anyone should hold a swing trade through earnings, but that is my personal rule. You don't have to agree with it. But if you're not willing to, you're just going to have to accept it. So if you are, looking from a directional point of view, it's really normal if there's fewer trades during earnings seasons, at least in my experience over the years. So, that's just part of the deal, but it can open up for some great opportunities, some great post-earnings opportunities. You saw KSU, can, have that nice little gap over its earnings. That was that nice long quadruple top that we saw, and carrying over, so it does present opportunities for us, maybe not specifically tomorrow or, the next trading day, I guess, since there can't be any, at least stock market trades for us tomorrow. There will be opportunities. So, just because it's earnings season, maybe you get fewer directional trades, keep note of those stocks that have those reports that catch your eye. Oh, that's a terrible report. If I get some bearish signals, maybe we'll talk. Or, hey, that was a really strong report, a really strong movement off of that report. Really good trade setups can develop shortly after earnings, and that's always the icing on the cake for me. I usually complain about earnings from a directional point of view because I hate looking at a stock breaking out and saying, nope. I think it was LMT was one that I felt that way here today. Coming out of a nice little break here today, little bit of room to the upside, but earnings, I think these guys were, they're the 23rd, so they're like Wednesday. There's nothing I think you can do about that. So that is earnings, that is life, whether we like it or not. Be sure to be checking those earnings. Be sure to be thinking about those earnings as well. We have 3M just as an example with earnings next week. You have to, most traders do a pretty good job of checking the earnings, making sure that, hey, their earnings are, I have enough time, right? We may not agree on what enough time means, but we all have our own personal interpretation of it. And most of us, are trained early and have one misstep and learn the hard way. And then we never forget again to check the earnings date. But one thing that we can do is kind of forget about the timing. If we have a 3M right now, for example, off of this recent pullback with earnings coming out here next week, there's no time to sit through a pullback on this. If this has, a down day on Monday, well, we have no time, right? So when you're managing your trades, keep that in mind as well. And again, maybe you don't agree with my evaluation on 3M, but I guess the point is think about it on the management side too. Do you have time to sit through a retracement if one's going to happen? If the answer is no, well, maybe use some different stop techniques. Trail it up, use a trailing stop, use an hourly 20 SMA or whatever. Think about that. I know I've been guilty of that a few times. I don't miss the earnings calendar. If I have a trade, I'm paranoid as can be that is going to have its earnings, but sometimes I can forget. Oh yeah, I can sit through a pullback. I'm usually a pretty patient dude. All of a sudden, I have 2 days. I just sat through the pullback. I had no chance for the upside that comes after because of having to leave for earnings. So keep that in mind as you're managing your trades as well. Sometimes I think we can lose sight of that one a little bit if we're not careful. Ladies and gentlemen, thank you so much for joining me today. That is going to do the market recap for today and for this week. But we'll be back in action here on Monday afternoon as if the holiday never happened. Of course, thank you for joining me. It's always more fun to do this with you guys than on my own. So appreciate your time here. If you are new around here, be sure to subscribe to the channel and hit that notification bell. And of course, follow us over at Tackle Trading on Twitter. You can find me at FrankMartin23 on Twitter as well. If you enjoy the recap, it's always helpful and appreciated if you do give it a thumbs up. So thank you in advance for that. If you're traveling this weekend, do so safely. I hope you guys have a great 3-day weekend. Get a little bit of R&R. We'll get those scouting reports to you a little early, so you can either catch them early or catch them on Sunday, whatever is going to work best for you. But if you are traveling, please do so safely. Have a fantastic 3-day weekend with your friends and family. And I will see you same time and channel here on Monday afternoon. So thanks, everybody. Have a great weekend, and I'll see you Monday.